Hey everybody, Keith Evelyn here with another episode of Entrepreneurship Simplified. Today I have Zac Smith with LendingWISE with me. Zac, hey, thanks for joining me, man. I appreciate it.
Yeah, hey, thanks for having me on, man. Happy to be here.
Absolutely. It's been a long time since you and I have been able to talk since I left Knoxville and you're there. But hey, tell me about what you've got going on at LendingWISE.
Well, first off, man, Knoxville is still here and it's still beautiful. I just want to let you know that.
Amazing. It's like, I haven't been back in probably about 6 months, but it's way better than when I was there. And I loved it when I was there. So
Yeah, it's awesome, man. It's come a long way. So what was your question, Keith?
yeah. So tell me about LendingWISE. What do you guys do there?
So LendingWISE, we are a full service loan broker for small businesses.
Okay.
There is a major problem for a lot of small businesses, and that's finding capital.
Absolutely.
That's capital to grow, capital to buy inventory, equipment. Sometimes it's just meeting payroll, whatever that is. So we're a full service broker from short term to long term, equipment, lines of credit, anything in between.
That's incredible. So I have always built all of my businesses assuming that I'm never going to be able to get any money for any of them. Like I had the idea, like when I was really young, I was probably a teenager because my first one I started when I was 20. I was probably a teenager. And then like somebody broke the news to me like, hey, brand new business, you're never going to get any money for it. So I just assumed like, hey, I'll never be able to get money for anything. Obviously, that's not necessarily true. And you specialize in helping small businesses, which again, that's what this podcast is directed towards. So tell me, who is the ideal customer for you? Who's the ideal type of small business that can come to you and get capital?
Yeah, so the ideal customer for us is anyone who is growing. So growing businesses are going to be the absolute best, man. So you think about, I like to say guys in trucks with logos.
Sure.
So like those guys are growing like crazy since 2020. We got new businesses popping up all over the place. So HVAC, plumbers, electricians, those guys are great examples because they're fast growing. So they're starting out maybe just a guy in a truck. They start getting a good reputation, start fulfilling their services. Now they start hiring. They're going to need money for working capital. They need more trucks. They're going to need money for equipment. And then they get big enough and now they might need a shop, right?
Sure.
And so they want to continue building that equity in their business and they may want to purchase it. So I would say that our best clients are somebody who's aggressively growing.
Sure.
That'd probably be number one. And then number two is somebody who's maybe just hit that top of that growth peak. And now they need to start refinancing some of that short-term debt that they use to really explode and get the high revenue growth.
Yeah. That's awesome. I mean, again, like you said, there's a lot of people like that right now, right? I assume there's a ton. So are you able to help people just in your area? Or are you able to help people everywhere? What's your, how does that work?
Yeah, all 50 states, all 50 states. I do focus a lot local because I love sitting shoulder to shoulder with business owners. I love seeing where they operate, get to understand their business and dig a little bit deeper. But man, we just recently closed deals in Phoenix, recently closed one in California, recently closed some in Florida. So it's really, depending where the business owner is. We do a lot off of referrals. So we started here in Knoxville, speaking to local businesses, business owners, and then just like any business, you start to grow through those referrals and they just happen to be all over the US. So yeah, we can do anything coast to coast, all 50.
Yeah, that's awesome. So what are the most common mistakes that entrepreneurs make when it comes to funding that you guys provide? So guilty as charged, again, didn't even know that it existed for a long time. What are the most common misconceptions?
Yeah, man. And to your point, that's a big reason why I got into this, right? So I've always had that entrepreneurial drive. Like I've always wanted to do something. I've had a million business ideas, maybe one of them was good, maybe none of them, I don't know.
Right.
But they all needed money. Right. And I was like, that's the one thing I felt like was always stopping me is like, I want to make sure if I get this off the ground, I can continue growing it. And how do I do that? So I just went to the source. I was like, well, if I figure this out for myself, I can help a lot of business owners, navigate on how to get funding for their business. Yeah. But I would say the number one thing that most business owners run into is they do not have a clear use of funds.
Interesting. Okay. So explain that to me a little bit.
Yeah. So think about clear use of funds. The best way to explain this is like going grocery shopping. So we've all gone grocery shopping when we're hungry, right? Sure. And so that's like the owner saying like, man, I just need money. Yeah. Right. So I just need money. They just go in the store and they just start loading up that cart with all kinds of stuff because they're hungry.
Sure.
And I would say, versus like a list. If you go in there with a list, you're tight on that list, you get what you want, you're going to spend less, you're going to get healthier food, right? Versus walking to the grocery store and saying, I need food.
Right.
not having a good targeted list that you're going to use it for, and knowing what that return is, once you spend it. And
Sure.
so a guy like you, in marketing, right? I'm sure it's pretty clear to you, hey, if you invest 5,000 a month with me, right, you're going to get X impressions. You're going
Sure.
to get Y phone
Here's
calls.
your ROI.
Yeah. Yeah, your ROI, exactly. And then you should be able to start converting this many customers. Like, you got to know that before you start putting money into your business, because it's just going to evaporate if not.
Yeah. I mean, I think that's a huge problem for a lot of startup businesses, right? Like they have the idea,
Yeah,
they have the passion. Let's go. And again, I'm guilty of the ready, fire, aim, right? I do that with
that's right.
basically everything I do. But there are certain things that you have to have in line before you actually do pull that trigger.
Yeah, no, absolutely, man. And I would say the second thing is just not being prepared, right? So a lot of
Yeah.
business owners are going to wait until they absolutely need it 100% before they reach out and say, oh, I need it, man. Like, hey, I got payroll coming up on Friday. What do you got for me? I meet a lot of business owners in that situation. Right. And so what we do is we use that short term, maybe it's a line of credit, maybe it's,
Sure.
working capital, just to get them bridged over that
Sure.
gap. And then we start working on long-term solutions for them.
Yeah. That's great. Yeah. I do know it's interesting. Again, I don't really have any debt on any of the businesses that we've owned.
Yeah.
I do know a lot of digital marketing agencies that use lines of credit though, just in my
Yeah.
industry. And again, to your point, they use it a lot of times, especially like with some of these really big jobs that people do, and it takes forever to get paid. And let's say you're doing a 6-figure website, but you still have to pay your developers and designers.
Yeah.
I got to be able to make that payroll though. And they often use it for that, right? Because there's not, like, I don't have trucks, I don't have any of that stuff. Like our overhead stuff numbers are not crazy, but payroll is everything, right?
Yeah, exactly. Yeah, you got to pay for that fulfillment before you get paid. So if you're
Yeah.
so let me ask you this: if you're doing a 6-figure website, yeah, what's your timeline on that? How long do you
Oh,
think
I
that
mean,
would
it
take
could
you?
be 6 to 12 months, right?
Yeah.
Easy. So you're paying
Right.
those people a salary for a year potentially before you finally get all of your money paid in.
Yeah, right. And that's no different than somebody doing construction,
Yep.
and they get $1 million contract and they got to go buy all the materials. They got to pay for the
Mhm.
labor up front. So we got programs for construction companies specifically. They can get 20% upfront of that contract to pay
Nice.
for those things, and then make draws throughout the period of the contract until they hit cash flow neutral.
Interesting. Okay, so they can
Yeah.
actually get that leveraged off of a signed contract.
Yeah,
That's
absolutely. Yeah, work in
incredible.
progress billing. And that's a tough thing to do. So a lot of what we do is going to be for deals that just don't make sense for banks. Because
Sure.
banks like everything neat and
Super
tidy. They're
in a
like
box.
super in a box. Yeah, it's
Yeah.
either yes or no for them.
Yep.
And so what a lot of entrepreneurs will do is they go spend a lot of time talking to a lot of different banks. I think
Mhm.
I saw a study, it was like 26 hours to go and apply at 3 different banks.
Oh, yeah, I believe that. 100%.
Yeah, it's wild. Yeah, and
Yeah.
so we maintain a relationship. Yeah, I say maintain a relationship. We have a network of about 200 different lenders,
Okay.
that we work with, and I say they do 200 different things. So our
Sure.
job is to know what those 200 different boxes are,
Sure.
right? So that way, when we come to me with a need, I can say, hey, these 5 banks, these 10 banks, these 10 lenders are going to fit what you're looking for.
Yeah. That's incredible. Yeah. So, okay, my next question is the person who's starting up, because this is the question I get all the time, right? When
Uh,
I box business solutions, customers, people, friends that like, I got an idea. I got an idea. And
yeah,
everybody's idea always costs a fortune, right?
yeah.
Are you able to help people like that? Or is it truly like, hey, you got to have something to show before you can actually get some funding?
There are some ways to help them. There's not a lot, not
Sure.
a lot available. And I'd say the worst thing you can do is come to me, come to a bank and say, I had this idea.
Yep.
You want to
I
say,
got this
I have a
great
plan.
idea. I
Yeah.
promise.
Yeah, it's a great idea. It's going to work. I know it's going
Scouts
to
honor.
work. Well,
Right.
that's right. Well, show me a plan.
Yeah.
Show me projections, right? Show me key personnel. Show me experience in that field
Sure.
and doing it before. What's the likelihood of you succeeding? And if you come together with a plan, there's SBA is a great option for that. Especially if it's going to take equipment and it's going to take time to get to cash flow neutral. That's come with a plan, right? And if
Sure.
you're not, and if you're like a typical entrepreneur that builds a parachute on the way down,
Right.
right? There's some options. People have done some crazy things like 0% interest credit cards. You're going to see
Sure.
that advertised all over social media, right?
Yep.
0% funding. Well, that's called credit card stacking.
Yep.
And just like any type of finance, some people are successful with it, some
Some
people
people
aren't.
aren't. Yeah.
Yeah, that's right. And I heard a guy buying a franchise with 12 different 0% interest credit cards.
Wow. That's
Yeah.
something.
Not my client, not
Yeah.
my client, but I would like to work with that dude, 2 years in
Sure.
and refi all that, put that on
Oh,
something long
100%.
term for him, and drop that down. But he got into the business. I talked to somebody who used 0% interest credit cards to do real estate investing,
Okay.
and they're able to use that for a down payment on a rental property that they got. Yeah.
I, so again, I use credit cards. I do not ever carry a balance on credit cards because my parents
Yeah.
scared me of that from a like very young child.
Good.
But I never even thought about that until you just said that. I'm like, yeah, I mean, you could actually do that. You could stack a bunch of 0% or even low percent credit cards to get you over. And then at that point, if you do have a stable business that like, here's my proof, right? This is look how successful I've been with this. That's where someone like yourself can come in and kind of save the day. And instead of paying, 27% interest,
Yeah.
because I'm sure that's what the credit card is, help
Yeah,
you
for sure.
refinance out of that into something that's much more long-term stable, right?
Exactly right. Exactly right. And I'm not advocating for that. I think there's use cases for
Sure.
everything, right? You can argue, good or bad on anything. I was able to direct a guy recently that had an Amex charge card. And so the Amex charge card, you got to pay that balance off every
Yep.
single month. And it was just, he was in a slow season. Well, that he had higher expenses, when he was busier, now it's slowed down. The revenue is not as high as the debt on that Amex.
Sure.
So we were able to get him a couple of 0% interest credit cards. I just direct them to the site so you can do
Sure.
a balance transfer and lower his monthly outflow.
Yeah. I mean, my guess is people that are already in credit card debt, but do have a viable, successful business. That's a great match for you. Like,
Oh, that's great.
really
Yeah,
is.
exactly.
Interesting.
Yeah, yeah. Long-term options that we can get them into,
Yeah.
just something that's more stable. It all depends what you buy. So back
Yeah.
to clear use of funds,
Yeah.
right? You want the product to match what you're buying. If you're buying a
Sure.
piece of equipment, you don't want to get that on a line of credit that you got to pay back in 6 months.
Right. Yes.
Right.
Yes. If you're listening to this, that is the best advice. Yeah. Do not bite off more than you can chew and hope that you can figure out in 6 months because 6 months is not a long time to figure that out. Right.
No,
I
no, you're
mean,
figuring so many things out, especially in a
like,
young business.
yeah, my gosh, like you already got enough problems trying to like figure out, hey, how am I going to offload this so I don't have to pay it all out in 6 months? Like, good gosh. Like that's the
Yeah.
kind of stuff that would stress me out big time with
Yeah.
lending. But yeah.
I had
So,
a guy I had a guy that I got from a bank,
mhm.
a kind of unique story. And this guy's been around for a long time. It's a family business, been around for 50 years. And he had $1 million line of credit with a bank. And he ended up using that line of credit to go buy a piece of property and thought, oh, hey, I'll use this to take it down, kind of use it like a bridge and then get finance out of it. He could not
Mm,
get finance out of it. His paperwork wasn't tight enough. They ended up putting him in special assets. They called the note. He had to move
oh,
banks. It was an awful situation for a very established business that does
sure.
very well, and he couldn't get out of that.
That is, yeah, that's very unfortunate. Oh my
Yeah,
gosh.
those things
That,
happen. Yes, sir.
yeah,
But they're entrepreneurs, right? I mean,
yeah.
we're gonna take risks, and sometimes they
Some not
pay out,
as
sometimes they
wise as others,
don't. Yeah,
right?
for sure.
So going back to something you mentioned a couple minutes ago, SBA. So do you guys help with SBA loans?
Yeah, absolutely,
Okay.
absolutely.
I mean, to me, everybody knows about SBA loans, but nobody knows necessarily how to get them.
Mhm.
The SBA historically, I mean, it's a government entity or pseudo government entity, so they're not super helpful. Their website probably doesn't work half the time. Who
Yeah,
knows, right? So, okay, so if somebody says, "Hey, like I've been told I should go look into the SBA," you are a person who's an expert at that can actually help them navigate the waters of the SBA.
correct. That's correct. And what's funny about the SBA is like you talk to every business owner, they need two things. They need a line of credit and they need an SBA loan.
Yep.
That's
Yep.
what they're gonna tell you.
That's
They're
what
gonna
they
tell you
tell.
that
That's what
every
I hear all the time. I'm like, but
yeah.
how are you gonna get the SBA loan? Like, how are you gonna do that?
Yeah, I don't know.
Yeah.
I don't know.
Yep.
And really the best way to get an SBA loan. So we're excellent at like 500,000 and below. So working capital SBA loans, that's where we
Sure.
really shine. Anything over 500,000, most banks are going to help you out. You're going to qualify with them.
Sure.
You're going to qualify with us. It really depends on like industry.
Sure.
Some banks will do specific industries, some won't. And that's really where we come in. So for example, I just had a guy who's doing a startup. We helped him get an SBA loan. And it's a really cool product. So with the startup for the first year, they were able to use it as a draw. And
Mm.
so it's a really equipment intensive um, business. So they're having to buy a lot of equipment. So for that first year, they can buy it as they need it. So as they continue to grow the revenue, they can get more equipment in. And over that first year, it converts into a note.
Sure.
And so when they max that thing out at the end of the year, that's when it turns into like principal and interest. And the whole first year is just interest only payments, which
Sure.
lowers that monthly spend that they have.
Yeah.
So they're not killing all their liquidity that first year. So that was an SBA loan. We were able to help him to get that financed, and we just closed on it last week. And what's cool is after that first year, he gets access to $100,000 line of credit also to help
Nice.
him out with any type
Yeah.
of working capital needs he has. And that was SBA,
Yeah.
and that is one of the smoothest transactions that I've had dealing with the SBA.
Yeah. I mean, so from what I'm hearing, I mean, you guys as a broker are like the best of all worlds, right? Because if it doesn't fit here, it fits there. It's kind of like way back in the day when I did before the mortgage crash, when I had, 20 different banks that I could to write to, like, hey, I know
Yeah,
for a fact that you are not a good fit for this bank, but you're going to be a great fit for this one over here.
that's right.
And having somebody who's an expert like yourself that can help direct you there, the amount of time and headache, and more importantly, like the anxiety of like, how do I do this? That can be
Yeah,
saved is I just insurmountable, I would think. Like, I mean, my gosh, because the amount
yeah.
of time you could waste would be just huge, huge.
Oh my gosh, yeah. So the guy's dealing with it. He's buying a franchise, for example. It's his first business, so he has no experience
Oh gosh.
getting through the SBA process,
Right.
right? And the bank that we use is not in his local market. So he would not have had access to that
Yeah.
product, without us helping him out.
Yeah. That's incredible. Yeah.
Yeah.
That's great. So, okay. Scaling and support, obviously, I mean, it sounds like you guys are like the perfect fit. If I'm ready to scale my business up and I just need some financial support to do that, you're like you're the people to come to.
That's it. Yeah. That is 100% why you would use us. You're in that quick growing, because most banks don't like it unless it's very
Mm-mm.
consistent,
Right.
3 to 5 years. If
Exactly.
you are like on a hockey stick growth pattern, they don't like it. It's
No, they
too
hate it.
volatile.
They
Yeah.
literally run from that.
Yeah. Oh,
Right.
you're doing awesome. We don't
Yeah.
want
No, we
we
don't want
can't touch
that.
it.
It's like,
Yeah.
wait a minute. Like, you would rather me actually go back down and just be stable? Yeah, no, yeah, that would make us feel a whole lot better. Just stay that way for 3 or 5 years and we're good.
Right.
But if you start scaling up too fast, we're gonna run.
Yeah. Too scary for us. Yeah.
Mhm.
We'll never get credit to sign off on that.
Yep,
Yeah.
absolutely. Absolutely. I mean,
Yeah.
that's great to know because again, I talk to people on a regular basis like, hey, yeah, I went to it's always my local bank. I went to Frost Bank down the road. I went to American Bank down the road and I talked to
Right.
them or their credit union or whatever. And,
Yeah.
I'm really trying to scale up. I want to double in size in the next 18 months. And this is what I know that I need. And they have like all the stuff put together. They have the plan, but then they end up
Mhm.
at these banks that just rejected. And at some point they just give up. And they're like, well, I guess I can't scale my business. Right. Like
Yeah.
there's no way to scale.
Right.
And
What am I?
right. Because I can't do it without money. And I don't know anybody who's rich that's willing to invest in my company. And the banks are all saying no. So what else do I do?
Right.
So yeah.
Yeah. And then what do they do? They turn to Google.
Yep.
They go to Google, and then they meet somebody from, I won't say it, like,
Yep. Some hard money lender.
hard money lender, right?
Yep.
And that's all they do. And they don't
Yep.
look at the whole picture of the business. And, sometimes it's a good fit, sometimes it's not. I'd say 80% of business owners out there will qualify for it, but that doesn't mean that 80% should use it.
Correct. Just because you can doesn't mean you should. Like
Absolutely.
in all areas of your life, just because you can
Yeah.
doesn't mean you should.
Yeah, absolutely, man. And so if you're using those, you got to use them as a bridge, and you got to have a plan to
Yeah.
get out, because otherwise you're just going to get into this bad cycle.
I Deanna and I was gonna say my wife, Deanna. Deanna
Yeah.
and I were consulting with one of our clients one time, and they weren't being honest with us about their funding. Like they kept talking about funding, they kept talking about this loan they had to pay, and like we're trying to figure out like the math on this loan, and we're like,
Yeah.
the math ain't mathin'. And it turned out it's because it was a hard money lender that they were basically constantly having to refi because they were never able to actually pay it back off because the interest rate was so freaking huge. And my
Yeah.
point to them was you've been in business for this long, you've been stable for this long. There's
Mhm.
it there's no way that you shouldn't be able to find some sort of product. At that time, I didn't know anything about, LendingWISE, but like at
Yeah.
the SBA, like my gosh, you've been stable for so long. And what it was they were trying to add machinery, equipment to their business to make everything much more efficient so they could produce at a much higher rate, is what it was.
Yeah.
It's like there has to be non-hard money lenders that can help you out. But my gosh, I haven't checked on them in a while. It might have put them out of business. It was on the way to putting them out of business, and it was very sad because I'm like, I mean, you're crushing it. You're doing so well, but like your debt servicing is
Yep.
literally crippling your business.
Yeah, it chokes cash flow. And then
Yeah.
it's the same thing we talked about earlier. Is like, it's great, if you're growing your revenue month over month, but as soon as that revenue comes down a little bit, well, your payments are still high,
Yeah.
and then it just chokes your cash flow. And then
Yeah.
now you can't get out of the cycle, so you take another one.
Yeah.
I was working with a business that had 6 of those, and their payments were over $80,000 per month.
Oh
Yes.
God.
And so we were able to get thankfully I was able to help them, and we lowered those payments by 56,000. And
What? I
yes,
mean, do they send you a Christmas gift every year? Like, good gosh.
we're good friends. We both almost cried when it came through because it
No
got really,
joke.
really close, man. It was really close, and we still got a good opportunity to get them in something long term. But
Sure.
the way I met them, we talked about the network,
Sure.
right? So a lender that I work with actually called me up and said, "Hey, can you help me with this?" They acquired this customer and said, "Hey, we can do this piece, but we need somebody else to do the rest."
Sure.
And I was able to locate another lender in my network to help with that, and we saved that
That's
business.
incredible.
It was super incredible.
Oh yeah, because that business they were going bankrupt. And I
Yeah.
mean, it would likely have made them personally bankrupt and the business bankrupt, and everything's just over, right?
Yeah, and they're phenomenal. They're phenomenal people. It's
Yeah.
a great business. They lost one big customer, and that's just how it worked. It just started
Yep.
snowballing.
Yeah. I mean, yeah, again, if you're listening to this and you have too much with one big customer, it can take you down real quick if something goes sideways. And it doesn't even have to be your fault. Like they could make a bad decision that puts them in financial jeopardy.
Yeah.
I've seen that happen to a lot of friends, a lot of clients where they just have too many eggs in one basket, not all of them, but too many. And then something happens and there's a disruption. Even I've seen it where like the person, they didn't lose the client. It was a digital marketing agency. They didn't lose the client. It got put on pause for like 6 months, but it was a big
Mm,
enough thing that like, hey, the majority of my employees are servicing this client. And while
yeah.
we're going to be going back to servicing this client in 6 months or 4 months or whatever it was, I still have to pay all these people. They're not
Yeah.
paying me. This is a problem. And of course they made it. They were fine, but like they learned the lesson of, hey, we can't be that like, the exposure was just too big, right? We can't be that
Yeah.
exposed.
That concentration risk. That is something that underwriters will look at too when they're
Mhm.
looking at your loan. They want to know if 50% of your revenues come from one customer, good chance you're not getting approved, right? It's too risky for the bank to take that on.
Yeah.
Is exactly what you said.
Yeah.
Yeah.
Absolutely. Absolutely.
Wow.
All right. So last question I've got for you. So where do
Yeah.
you see the future of your industry? Like what's going on in the next 5 years? Is there regulation that's going to create problems? Is it regulation that's going to make things easier? What's
Hard to tell.
put on your hat here, crystal ball. Let me
Yeah.
tell me what it looks like.
Hard to tell. So I think there is going to be more regulation coming. I mean, with the administration in, maybe that'll be kicked down the road a few years, right? I
Sure.
think they like to deregulate things. But what we've seen prior to this administration is the Consumer Finance Bureau, Protection Bureau, is getting more involved. So yeah,
CFPB.
being in mortgage and auto finance, you had to deal with a lot of that.
The bane of my existence.
Right. So something that's good about our industry is, one, yeah, we don't have that. So we can be fast, right? There's not a lot of red tape for us to go through. We can be quick. We can help people. Why it would be good to have a little more regulation is because it gets some bad actors out.
Sure. Yeah.
It's a very low bar of entry to do what I do. I hate to say that, but it's true. So
I mean, there's people that ruin it for everybody else, right?
that's right. That's
Yeah.
right. So I'd say there's probably going to be more regulation. You're seeing it in different states: Utah, Virginia, New York, California.
Sure.
Like they're kind of setting that stage right now. And then I think with AI, man, it's going to be pretty amazing. LendingWISE is my company. The way that I got into business is I bought into a franchise of a company called Lendio. And
Okay.
so I still use all of Lendio's back end, framework. I still use their lender matching. I still use their customer service portal, right? So that
Sure.
way everything's secure. But LendU has this really great, software that will automatically match customers based off of what they're actually seeing approved. Because like a lender will say, "Hey, send me a business if it's in this industry, if it's this credit score, this amount of revenue, right, and this amount of time of business." So if it checks all those boxes, they say send it. But Lendio has all this data on what actually gets approved. And so instead
Ah,
of just going off of what they say their
sure.
criteria
Sure.
is, now we're able to streamline it even faster. And their goal is to have automatic approvals. As soon as you log
That's
in, punch
awesome.
in your information, and be
Yeah.
able to tell that, which is amazing. So you're going to see a lot more of that, especially with AI, man. How fast it's learning.
It's
Uh,
it's scary.
it is
Uh,
scary. I mean, you think
that's-
where we were 2 years ago. It's
uh,
nuts how much it
Again,
can do right
another podcast I have, I told everybody, hey, everybody just be nice to your AI. Say please and thank you. Don't yell at it. Like, because when it's running the
now. Yeah,
world, you want it to remember, oh, that you were nice to it.
that's
It's,
right.
yeah, it's terrifying. Terrifying. But I
Yeah,
mean,
tell
that
Alexa
said,
thank you.
yeah, exactly. That said, I mean, it does some amazing stuff. Like this podcast that we're doing right now. When I
Yeah,
finish, I can click a button. AI will edit the entire thing if I want it to. It'll put
yeah,
captions. It does everything. It is nuts, nuts.
yeah.
So, but yeah,
That is amazing.
there's it's good and bad. There's definitely good and bad, but there's a lot of good right now. So,
Yep.
well, hey man, I appreciate you taking the time. How can everybody get in touch with you if they want to contact you, get some, to just have a conversation about getting some financing? How can they get in touch with you?
LinkedIn's great. Look me up on LinkedIn. Zac Smith on LinkedIn. LendingWISE is my company. You can find me. I'm in Knoxville. That'd be a great way to reach out. Also through email, zac.smith@teamlendingwise.com. Just send me an email, drop a line. If you're going through something or just have some general questions, I'd love to connect with you and see if we can help you out.
Awesome, Zac. Again, thank you for your time today, and it's some great information. Everybody's gonna get a lot out of it, so I appreciate it.
Yeah, man. Thanks for having me, Keith. Appreciate it.
All right, that's a wrap for today's episode. Your next step: take what you've learned today and put it into action. Now, if this episode gave you something to think about, do me a favor and leave a review or share it with someone you think needs to hear it. And if you have any thoughts, let's continue this discussion. You can find us on social media: Facebook, Instagram, and LinkedIn. Let's simplify entrepreneurship together. We'll see you on the next one.